think we can just go ahead and start. And Ashesh, if it's okay, I'd like to start with you. I wanted to kind of, given your experience in turnaround management and kind of dealing with distressed assets, I thought that would be a very natural kind of route into this topic. So I wanted to kind of lean on that and ask you what you would say to, so the situation founders are facing right now, and a lot of them first-time founders, is that they kind of overnight have fallen into distress. So I want to understand from you kind of what you would say to them along two kind of lines. So there's obviously what changes when things are going normal, and then when someone falls into distress. And then from a turnaround management philosophy, how would you want them to think about it so that they could kind of navigate their way out of it?
I would say a plan to navigate the next 12 to 18 months has to be prepared, because I believe that it's going to be a difficult environment for startups and for the small young companies for several reasons. Firstly, I think a lot of things are going to change. Capital is going to become a lot more scarcer. Not too many venture capital investors are going to deploy funds till there's some clarity on how the economy is going to do, how the industries are going to do. Also, a lot of the VCs may have to fund their own companies. So instead of making new investments, they probably would have to deploy those funds for their own companies. And because of slower growth and higher uncertainty, valuations may take a hit. So under these circumstances, the startups have to be prepared to hunker down and survive for the next 12 to 18 months. Because if you can survive that much, then you'd be able to navigate through this and probably come out a winner. To prepare a plan for the next 12 to 18 months, again, each startup would be different, each company is different, but broadly, I would say the founders have to pay attention to three or a couple of big buckets. One looking internally, the other one looking externally. Looking internally, one has to really focus on managing cash and cash flow, because cash is king in these times. If you can survive with what you have, then you would probably come out a huge winner. You'll take market share, because a lot of good companies which have great people, great products, burn out because they run out of cash. And you, as a founder, don't want to be one of those companies. So you have to look at all your expense items very carefully and see where you can cut, where you can save, where you can defer. A few examples could be, if you were planning to have if you have a B2C product and you're planning marketing blitz on Google or Facebook, do you really want to go ahead with it? Or if you want to go ahead with it, do you want to dial down? Because if your product is something which is discretionary, a lot of the customers which are also shell-shocked are not going to buy, do you really want to spend those monies, right? Or if you're in B2C, you're planning to hire 5 marketing executives to hit your clients. Do you really want to hire 5 new guys, 4 new guys, 3 new guys? What is your new reality, right? So similarly, any other expense you can cut, any new capital expenditure you can reduce. So if you were planning to give, new Surface laptops to all your marketing guys or people who travel, do you really want to do that? Do you want to buy them now? Do you want to buy them 6 months down the road? Do you even want to buy Surface? You want to buy something else? So you were planning to have 5 printers. Can you live with less? So any capital expenditure item also has to be looked very carefully. Similarly, staffing. So can you really put a freeze on new recruits? Can people do multitasking? You really fundamentally have to look at what can you do there, because manpower and talent is the biggest asset for most of the startups and most of the companies. So that's an area at the same time which is also one of the biggest spends. It's the biggest asset and also one of the biggest liabilities, especially for the startups. And how do you manage that liability? I mean, at the senior level, can you take a salary cut? It could be for a short duration, right? At mid-level, can you defer the salary, still new funding comes in? Would you need the staff because you're planning to have a release in 6 months, but now your end customer is probably not going to absorb as much, and you can defer to 9 months. So how many people do you need? You were expecting certain churn, but that churn may not be there anymore because people are not going to quit as easily. And so you really have to look at your staffing levels. You have to look at your salaries. You can look at what is really required, what can be outsourced, what can be converted from fixed to a variable cost. So these are the internal things that one has to look at. Along with that, one also has to validate the business model externally, right? So if you were planning to roll out something and we're expecting that you'd sell, let's say, 100 licenses in the next quarter, are you really going to sell 100 licenses next quarter, next year, whatever it is? Is it going to be 80? Is it going to be 70? Is it going to be 60? Poll your customers, find out how they are doing, whether they are willing to do it. And you're expecting certain pricing. When your end customers are growing, maybe that was the right pricing. Now, to get traction, are you going to have to give a discount, or is your customer actually going to ask you for a discount? And how is that going to impact your cash flows, right? Uh, Also, how the customers are going to pay you. So if you are going to pay your rent late, the customer may also want to pay instead of 30 days at the end of 45 days, 60 days, whatever. So working capital is going to get stretched. So you have to really sit down with your business plan and go through it very carefully, come up with a new plan, and then start prioritizing how you're going to get the maximum bang for your buck, right? So sometimes you can get a very big bang, but that's a deep cut. Do you want to go with that upfront and feel safe? Or do you want to wait for a few more months, see how the situation turns around post COVID, and initially let some of the cash go out through the door, realizing that that cash is never going to come back?
Sure.
So prioritize and implement. And that's the way how you plan, and then you go about implementing a plan for a difficult situation.
Absolutely. Thank you so much. So it's pretty much about analyzing your expenses across the board and figuring out where you can make those hard cuts, at least to see you through the short term.
So, Ninad, I want to direct this question to you, and I want to take a little bit of a macro perspective. So, you have lived through 2000, the dot-com crash, 2008, the final financial economic crash, 2010 in Greece, we saw a geographically located, economic problem, and 2015, similarly, we saw a crash in the Chinese stock market. All of these can be categorized as either structural issue, cyclical issue, or even just contained to a particular geography. How do you believe that this impact that we're seeing today is going to have a different, different rollout or different impact in the startup ecosystem, or just generally in the economic ecosystem in India and globally?
Thanks, Ivan, now for revealing my true age by saying I've lived through so many crises. Now everyone knows what my true age is. So each crisis has actually led to, if you go back in history, each of these crises, there have been some significant winners. So, the dot-com bust, a lot of people lost their money in the shirts. But there were companies like Google and Amazon which emerged from that crisis, and today they are world's global leading companies. So even similarly, downturn of 2008 led to companies like WhatsApp, or Venmo is a big company in US, digital payments, or Uber. So all crisis leads to some huge winners. And some people really get a momentum in that. So I fundamentally believe that this is an unprecedented crisis, but we will have some, as we, if you have a fireside chat 3-4 years from now, I will be talking about at least 2-3 huge global winners, and one of them hopefully from India. So I do believe this crisis is going to lead to some winners. How will that happen? A lot of things Ashesh has said about what the companies need to do. What is so different about this crisis, and what do startups have to do? I don't think the earlier crises were related to health. Health is something people really get really worried about. If there's a financial crisis and you say sit at home, no one will sit at home. If today all of us are locked down in many parts of the country, most of the country, and the reason is health. The other big issue is startups and VCs and businesses can handle risk. Risk is inbuilt in the way we operate. Can we handle uncertainty? Till now, no one had a model or even thought of handling uncertainty. we now live in a brave new world where we have to figure out how we handle uncertainties in the future as well. Health is now a priority, but again, reflecting on Ashish's statements, I always speak about 3 C's: conserve cash, cut cost, and collect receivables. These are the 3 things which really, if I have to give any mantra in this webinar, these are the 3 C's which will help you sail through. From a VC perspective, we at 100x, we fund early stage startups. We take very early bets. So we are still gung-ho about the future, feeling that we have to now identify specific startups catering to specific industries and startups or companies which have pivoted to the new reality. And there's a lot of stuff connected to new reality. We can speak further down the line. But this new reality has challenges. And I, on the other hand, feel it has opportunities which one will never have anytime in future for a startup to engage and be successful in the long term.
Sure, thank you for that. So actually, I want to ask a follow-on based on your answer to Ankur. So Ankur, you have worked in the platform-based companies, first with Groupon and then with Nearby. At the end of 2000, we had seen a focus shift of both entrepreneurs and of venture capitalists on not focusing on eyeballs or driving people to their platform, but rather on actually generating revenue. What do you believe that this crisis might bring about a change, like in the way startups are looking at their business models or looking at the way they're, looking at building their companies?
I think what's going to happen, and I already see that conversation started, and I hope to see that translate into action, which is going to happen sooner than later, is this focus finally on no growth at all costs is bullshit. It is something that was never sustainable, but there was, of course, a drug and liquidity that was driving that in all corners with very little semblance of sanity attached to it. But now that cash has become considerably important, the economy is going through a very visible downturn. There is no hope that for the next 18 to 24 months, there will be a recovery back to where we were just about 3 months back, as was mentioned by Ashesh and Vinit both. There is this very clear focus that profitable sustenance and profitable existence is greater than revenue growth. And that means, my opinion, back to very core product development, very core assessment of what truly product market fit means, building something that consumers want and not just investors, building something that makes money much earlier than it used to in the past, or investing in deep tech that may have massive impact and effects considerably down the road, than making short changes and short code to just make your existence go through. So every such cycle has always just taught the industry something very fundamental, very basic. None of what I'm sharing is anything that no one is aware of. None of this is new or shocking, but it's just a very stark reminder. And unfortunately, we just need stark times for these stark reminders that this is back to basics. When you're building a business, the first and foremost responsibility of the business is to generate profits. It is to grow sustainably. And if you have borrowed money for just your survival and not borrowed money for your growth, then that was always bad money to borrow in the first place. And even if you got it easier, it doesn't absolve you of your quote unquote crime that you were never running what would have been a unit economics profitable business, a business that is contribution margin positive from get-go, a business that customers would want to make money on, or customers help you make money on very early on. So I'm seeing those conversations and those actions translate. Nearly not as much. Like, I'm still surprised at how many people are, this is going to come back and dollars will come back. China started work again. No, it's not how it works. But I think the next 18 to 24 months will teach us a lesson that I wish was taught in a different way, but I'm glad it's being taught.
I mean, one can say that the amount of crises that we've seen, we should have learned this by now. But anyway, thank you for that answer.
the next one, actually, Vinit, I'd like to turn to you. It's a bit more of a conceptual question that we've touched on, but I want to understand just again putting myself in the shoes of a first time founder who doesn't know what he doesn't know or she doesn't know. So you've obviously I mean, there are three companies that you've built, and two of them have actually had successful exits. So that base layer of complexity, as far as building a startup goes and scaling it and then exiting it, is something very familiar to you. So I want to ask you, what would you say is the additional thing that suddenly is falling on a founder's plate right now? What's that additional layer of complexity that a crisis brings, that a founder has to kind of keep at the back of their mind and know that they have to deal with that?
Thanks, Arvind. Great question. You are right. I've had the fortunate or unfortunate, luck of having, my first company got acquired in 2007, June, July 2007, about 2.5 months before, Lehman Brothers collapsed and everything hit. So I come from having been very, very lucky. I mean, if we had negotiated on the term sheet for another 30 days, there wouldn't have been a term sheet, right? So I come from there. Primarily, I think the one thing that founders always know in the back of their head is that, things will get worse, right? I mean, this is unless you have already had an exit and the money's in your bank, everyone other than that has got to realize that things will get worse. And I think the last month has shown us this very viscerally, that things can get worse at any time. So those kind of founders who truly are willing to understand the risks of entrepreneurship, that gets very clear and upfront for them. There are too many, what we all like to call, I am an entrepreneur because it's the current fashion trend, right? That goes away. And truly the people who have the passion, because you have to understand, right? Entrepreneurship is only glamorous after you put in the hard work. It's never glamorous when you're actually doing the hard work. So that's going to come up front and center to everyone's head. And linked to that, I think the real silver lining of what we are going through right now, and I've seen this in the past, is many founders, during comfortable times. What I mean by comfortable times is when not all hell is breaking loose, right? Only a few things are breaking. They get distracted. They think of adding new features and going into new verticals and targeting new types of customers, which originally their business plan was not supposed to support. And nothing has changed for them to suddenly do that, except for the fact that they have free time. I think that's going to change, right? Now, this is taken out of your hands as founders. Where should you focus is no more your choice. And I think that is the most important sort of lesson that I think founders will learn today, that earlier only the people who were willing to focus, did it, right? And everyone else also got along. Now, across the board, if you got to survive, you got to focus on your core product, on your one North Star metric, on your core team, on your core customers. And this choice is not in your hands anymore, right? I think that's something that's, something I have seen in my previous startups as well. And that's very important. I mean, I'm the first one who will say I have been all over the place. My second startup, which was the only one that didn't get acquired, we were all over the place. And, lesson learned. What else can I say? And another thing, I know Ankur already said this, but I just want to reiterate that, guys, a lot of people were earlier paying lip service to a lot of terms, unit economics and profitable and margin, and what was happening, what I mean by lip service is they were leaving it on Excel sheets or on their PowerPoints, right? They would come out of the meeting and they would forget those words, right? This isn't an option anymore. And the few of us who have been lucky, all these years I was unlucky, I was surrounded, I've come from a Marwadi family, and everyone in my family was like, what the hell is a startup? You only make losses, right? And no one in my family understood that. They were like, whatever you're running, you got to show me some money, right? So unless you're doing deep tech, where the tech is 2 years away, everyone other than that is going to have to be very upfront with themselves, not with their employees, not with their investors, not with their mentors. They'll have to be very upfront with their selves, where the money is coming in from every single day and every single transaction. And people who can do this may survive. People who can't do this definitely won't survive. And I'm very happy for the ones who can't survive, because then they can go and do other better things with their life.
So, Vinit, if I may add, your family wisdom of cash is king, and at the end of the day, kitna cash aa gaya rokda is what you need to tell your startup founders again. So it's a very old Marwadi method of accounting, Gujarati method of accounting, chopadas. That wisdom is back. Cash is back as king.
The
Cash is
problem, is not that we didn't say it. The problem is no one was hearing it.
Chalo, now they hear it. Hopefully.
Now they have, like I said, right? Now they have no choice. They are focused. Earlier they were distracted. They're like, Vinit, I like what you're saying, but in the middle of hearing you, I got an email with a term sheet, so I don't need to hear you anymore. Right, now that's changed, right? Now there are no more emails distracting them from the basics.
Sure.
So that's my take on this point at least.
Sure. Super. So just based on responsibilities, I want to direct a question to Ankur. So Ankur, there's a fiduciary responsibility for a co-founder, for a CEO of a company to various stakeholders. That can be to your investors, that can be to your employees, and that can be to your customers, and to ensure that that your employees have stability in their career, to your investors that you maximize cash flow and ensure that your company succeeds, and to your customers that they get the same product or service that they have been receiving. So based on your holistic understanding of a company, can you tell us how you will be managing these various responsibilities that come at odds with one another at some point?
I don't envy anyone who's in this position, man. It is the hardest thing to manage. As a founder, I think your foremost responsibility is towards the vision of the company and what you genuinely founded. But if you also are the founder and the CEO of the company, the CEO's responsibility is only and only to increase the shareholder wealth and the entire shareholder investment that has been made. And those two will be at loggerheads during a point of crisis. Of course, the biggest stakeholder in all of these are your employees and your customers and your vendors. My personal take, and I don't mean this as guidance, but this is something that's helped me a lot, is I go back to what Ben Horowitz in his book, Hard Thing About Hard Things, articulated, and I felt that this is the best representation of what I stand for. It's people, product, profits in that order. And that is how I would deal with this crisis as well. Your people are the ones that need to be there together, because those are the ones that will be needed when you come back. And unfortunately or fortunately, I'd say that if you build the right culture, this is going to help you right now. If you did and you thought that culture was something fancy that you could outsource to the head of HR, you're just so goddamn wrong. And then this is when you will realize it. So if you invested in the right culture several years back, right from day one, that culture is not going to help you grow right now, but that is the shit that will hold this together. So that is people. And I say this because this is a hard time when you will request people for pay cuts. You will lay off people. You will have very uncomfortable conversations, and how they leave you with, or how they continue to stay in the company and feel, is going to determine a lot of what happens to you. Second is product, which is you are making this for your customers. They ought to get the best of you, and you will have to continuously thinking. And that this is a great time because, as Vinit mentioned, it's distraction less. So you actually get back to basics. You build the product that you always should have. You mend your ways, you fix the bugs, you build it in the way that is long-term and sustainable. And if you do that, you may not get profits right away, but that should be your goal when things begin to come back to normal. All that you hope for right now is that you have runway to sustain this period, but you're ready for not going through this crisis, but the post-COVID world, whenever that is, 3 months, 6 months, 9 months, 12, 18 months, whenever the world begins to show signs of normalcy, you are absolutely best prepared to just come down as a hawk and kill it better than anyone else. But if you missed out on all those steps, no, it's tragic. Like I'll make this remark, and it may sound almost as if you can't do anything, but in business school, a lot of people are like, I want to get into consulting. I want to get into consulting. It's like the best job. And I tell everyone that your chances of getting into consulting are actually 90% determined before you enter that business school. Whatever you do at business school is only going to be a reaffirmation of what you did in your life all through. And that is going to get you the best job. It's not what you do in that 1 year or 2 year that's going to get you the best job. And that's same here as well. What you've consistently done in the past is what's going to help you survive It's not so much of what you do in the next 3 to 6 months, but if miraculously you're able to move yourself really fast and get yourself sorted, it may happen, as Vinit mentioned, but those who've been doing it will be the ones who will reap the best benefits of this.
You briefly mentioned about layoffs, and Vinit, this question is directed to you. You wrote an article back in 2017, the title of which was "Layoffs Suck, Be Less of an," and I'm not going to say the word since we have some young viewers over here. But today we're seeing unemployment. There's an article today that is hitting a 43-month high. So, as much as founders may hate to do it, or CEOs might hate to do it, they have to lay off employees. Your advice at that time was help the employee find or land their next job. That might be extremely difficult today for a founder to do just because of these statistics. So, Vinit, what is your advice today? Has it changed from 2017?
For everyone else, it said layoffs suck, be less of an asshole about it. Yeah. No, and I'll tell you why it's important, right? Because that asshole was directed towards me as the founder, right? Because layoffs are not about you. You still have your job as a founder, right? The layoffs are about all the people who, you interviewed them, and as founders, we are all very passionate. We have sold them our dream. We have told them, "Aake mere saath kaam karo." We are going to be the next Google, the next Facebook, the next whatever, right? That's what you've sold them. And now X number of months after that, you're just telling them, "Hey, guess what? I messed up, but nothing really happens to me." Sure, the startup may shut down, but I am not losing my job today. You are losing your job today, right? I was a little, if I may call myself lucky, that in 2017, when that actually happened, I had to take the call, and investor who said yes, then said no in the last minute. So that's why some team members had to be laid off. I at least had the advantage that there were jobs available outside that I could, crowdsource through my friends and professional networks. And I got on the phone with other founders of other startups, other friends from school, from college, and I sold my guys. I was like, "Hey, listen, this person is phenomenal, and I'm telling you this on the phone. I'm not putting it out on LinkedIn where I have to be politically correct. It's a conversation between me and you, and I can tell you what are the strong parts and what are the weak parts of this person, right? And if you still like them, great, go for it." Today, yes, you're right. How do you even make that call to other, founders who themselves may be considering layoffs or, cuts or whatever you call them, right? Having said that, there's actually a very different way to look at it. Right now, there is a very temporal dimension to this conversation, right? Will things be bad? Yes. But there are certain sectors where things will be bad for a year or 3 years. And there are certain sectors where things will only necessarily be bad for 3 to 4 months, right? You've got to be very clear on identifying that. And even if it means, I may be expanding the question that you asked me, but please, as founders, if you have to take a call that you will be laying off people, it is not easy. Do it. Yeah, it is tough. It is hard. A lot of those people who I laid off are actually now my friends. We're even connected on Facebook. And I think that only happened because I was authentic in what I could and could not do for them. There's some people who I could not get a job, and I told them, "Hey, listen, I've tried my best. The only thing I can possibly do is I can go through your resume and improve your resume for you. I'm unable to get you a job." That's me being authentic, and that's me helping where I could. There are sectors which will grow in 3 months again, right? Because the offline players are going to die, or your other online competition is going to die earlier than you. And today you're already seeing that, Grofers, Zomato, all of these guys are hiring tens of thousands of people. I believe that it's only deferred by 60 to 90 days. It's not that the jobs will not be there even in September or October. You have to put in a little bit extra effort as a founder who is laying off people to give them that option. It's a time-based problem. It is not a binary problem.
That touches upon the next question I wanted to direct to Ninad about the sectoral perspective. So I think, Ninad, especially given the cohort you have in class 1 of 100x, I think, that you have all sectors. You have the essential ones like healthcare and agriculture, and you also have ones that are very important to the B2B side. So you have human resources, marketing, and things like that. So I wanted to ask you, kind of zoom out from the founder and ask you, because you're at such a unique vantage point for these founders, for these sectors, are you seeing this, the crisis affecting all of them kind of indiscriminately? Or are you seeing some being affected more than others? And, or are you, more importantly, are you seeing any that will actually benefit? So Vinit did touch upon this. But for example, what Airbnb went through in 2009 and kind of really found its timing in that crisis. So how is the kind of balance of sectors in terms of the crisis? How would you say?
So we had invested in 20 companies as the first institutional investor in these companies in December. Through an iSafe node, which is unique in India and all that, which all also, it is there on our open source on our website, how we are investing. So out of this 20, more than half had already got funded and their commitments still hold. Now there are three buckets of these companies which have invested. One is, all-weather companies. This crisis doesn't impact them at all. Second is a positive effect. And third is not so positive. So, all-weather companies will continue. There is certainly not an issue. Online companies, which, is in training or all that, suddenly are catching a lot of flavor of the month. So they're getting a lot of interest. But the interesting part is, the companies which, I think this crisis will last for whatever time. These folks have pivoted either marginally or completely very soon. They are smart kids and they've done it very, very soon. There are a couple of things, guidelines we told them, and some of these changes are either permanent or mainstream. A lot of the changes which are happening are not temporary. Work from home as a model is permanent / mainstream. Online meetings, online education, online entertainment is, mainstream again, if not permanent. We have told these founders that this is a once in a lifetime opportunity. They couldn't believe me. I said, yes. When will you ever get a chance when all your consumers are sitting home? You can target these consumers. They're all sitting at home. You have to figure out how to reach out to them. Otherwise, to target Arvind is so difficult. He's in office, he's at, bar, he's at, entertainment place, in a cinema hall. Now he's sitting at home 24 hours. So easy to target you. So you have to just change your mindset. Never will mankind get an opportunity where everyone in India is sitting at home and all consumers sitting at home. At home, so all product services have to figure out the market strategy of at-home delivery, either online, through various products or services, and digital. So if you take the overall sum part of all of this, except for industries like travel and all, which will probably take some time, majority of industries can pivot and can, become meaningful even with all this what is happening. So yes, the lesson we have found is none of our cohort companies are such that they will fall off the cliff. All of them, most of them have got funded and most. So looking ahead, what is going to happen is fundamentally, everyone's going to look at all the companies. So we are looking at this as an opportunity where we identify companies who are able to grab this opportunity of the entire consumer base in India sitting at home, and how do they target that with their product or services.
Okay, great. Thank you for that. Actually, that made me think of just a follow-on question. After this actually normalizes, say 60 to 90 days, like Vinit said, say a lot of it has normalized and it starts resembling normalcy to some extent. You're going to have, obviously the engine is going to kick up again, and a lot of founders are going to come to you with pitches for their startup. And I think, I have the feeling that you'll get a lot of lack of performance being blamed on the coronavirus. So this is a bit of a strange question, but I just wanted to know, from an investor's perspective, especially as the first institutional investor, what would you kind of be willing to overlook in terms of performance because of the coronavirus, and what would you continue to hold a founder accountable for? Because you did mention, if the pivot's done, if they can they focus on the consumer side. So I just want to get a sense of what should they still be thinking that they can do and they should do in order to improve their fundability chances.
Never waste a good crisis. It's Sir Winston Churchill. Has the founder wasted this good crisis? If she or he has, is not fundable. If she or he has figured out that you don't waste a good crisis, you build a product which is, tuned to this new reality, work habits, lifestyle habits, health hygiene, interaction with people, online. All this is, these are, as I said, permanent / mainstream changes. Does your product or service align with the new reality? Well, it might take 6 months to take off. It might take 9 months, 12 months. But we are the first stage investor. We discover companies. We discover companies which are early and we invest early. Is the founder done this model properly? If she or he has, they are fundable. They can be fundable. It's, people are really looking for future winners. The companies which presently are in a kind of a later stage, they really need to figure out how to get funded. But if you're looking at the future, you look at companies which are winners of the future. So never waste a good crisis. It's not my quote, so Winston Churchill.
Thank you.
Okay. So I again want to take a little bit of a macro view, and Ashesh, I would like to direct this question to you. So Ashesh, my question is that we're seeing across countries, we're seeing lobbying efforts to ensure that startups get the right policies to weather through this storm. You're seeing for the CARES Act to ensure that in the US startups fall under that ambit. On March 30th, we saw a letter written to the finance minister asking that allow companies to invest into startups as part of their CSR norms, or reduce the interest that they have to pay on loans, or allow them to set it off in the future. So Ashish, my question to you is that what kind of policy recommendation would you have for the government, either just for this storm or just overall for the startup ecosystem health that you believe could help?
I would start with, for this particular crisis, we have time to think of what we need in general. But this is a severe crisis, and government should try to enact policies to help the startups, because startups are a very important part of our economy. They create jobs, they create innovation, and they create a lot of value. And our honorable Prime Minister in the recent speeches has said that he wants to support the wealth generators. So this is a segment that's very important part of the economy now as well as in the future. So government should try to help, and the industry should try and lobby to get help. You mentioned other countries, but I think we need an India specific policy, because the other countries have very different financial systems, ecosystems. I mean, US arguably has one of the most developed financial system, and they have so many layers of capital that somebody can get, the structures that are there, and most importantly, the liquidity there is phenomenal, right? The number of pieces, amount of money that is there, and the mindset of taking risk, plus the the cushion that government provides in terms of the new care package, or the other packages that are coming up. I don't think all of those are possible in India or applicable to India. So, in my mind, for India, the government should enact a package that consists of two core areas which are under government's control. One is on the monetary policy side, and the other is on the fiscal policy side. And the monetary policy side, I think it can be done fairly quickly, and that can be a good short term fix. One of the examples I can think of is during the last crisis in 2007-8 timeframe, and I come from the turnaround and distress background. Government had come up with a stressed asset stabilization fund to support the companies, support the lenders during that time period, right? Something like that, which could be a startup stabilization fund, can be put together. That can have policies which can help the startups tide over this period. So, for example, paying some part of the salaries, maybe it's 80%, 70%, 60%. I don't know the number, but for 2 months, 3 months, even 1/4 of salaries would go very far in giving a semblance of stability to the startups, right? So it doesn't take a whole lot of money. Government can protect itself by saying that either you have an ability to repay this money over next whatever period, let's say 12 months, or it gets converted into equity and it's managed in a trust, just like the stress asset stabilization fund is being managed. So I think government can convert this at some valuation, maybe at the last round, maybe some discount to last round, so that only the people who really need it would take it. But some sort of monetary support would go very far, and there could be several other things which can be woven into the monetary side. And on the fiscal policy side, again, helping to create inflow of funds is very vital. I think the next 6 to 12 months are going to be very hard for startups to raise money. A lot of the venture capital funds are going to be very, very careful in evaluating, because there are new economic realities. Until they don't understand it, they don't understand the pivot that an existing company is doing. They don't understand the growth, the new valuations. So capital is going to be scarce in the next 6 to 12 months. And how can government enact fiscal policies to pull the capital in? And in my mind, some of the thoughts there could be that if the government declares, for example, a long-term capital gains holiday for next 12 months. For example, those who invest in startups during the next 12 months on that particular tranche won't have to pay long-term capital when they exit. And this is this is a use it or lose it kind of opportunity. You have a limited time period in which you have to deploy money to take advantage of that. That would pull in a lot of capital. That will create a flow of funds for the startups, right? Or for example, if TDS is waived, so startups, most of them have to pay TDS, and if you don't remove TDS, let them realize the full amount for revenue generating startups. That again brings more funds into the hands of the startups. For government, there is no real loss of revenue, because eventually, if they are taxable, they will get it. And if they're not taxable, they don't have to wait for the refunds. So enacting fiscal policies again for a defined period of time, maybe 6 months, maybe 12 months, maybe 18 months, maybe from 1st of April till the next March 31st, would ensure that the risk capital comes in and the startups have an ability to raise money, because otherwise this value of death would become very scary. So some combination of monetary and fiscal policies, and I'm sure there are many other things that can be put into it, can be developed into a plan which doesn't have to be perfect. It has to be implemented fairly quickly. I think it can be done with the support of all the startups, all the investors, and it can happen fairly quickly.
Sure. I hope that we see some kind of lobbying efforts by all of you panelists over here to help our startups that are over here. Thank you for that.
Thank you, Ashesh. Ankur, if I could zoom back into the founder with you. You did mention in the previous answer that you kind of follow the hard thing but hard things philosophy, which is people, product, and then profit. So if we could I've been following you on LinkedIn for a while. You speak quite frequently about leadership and motivation and kind of building the right culture in your teams and things like that. So just kind of going back to the founder and understanding from a leadership perspective. Obviously, this is especially for new founders. Leadership becomes so much more important. At the same time that you're giving bad news, you need to motivate the teammates to perhaps work even harder than they would otherwise and kind of stay true to the vision. So just what advice would you give to a founder, first time or otherwise, for just kind of navigating their leadership style, as well as not only motivating their team, but motivating themselves on a daily basis?
That's a powerful question. And I think a completely different topic that one should devote themselves to. Here's something that I have realized, and I'm sure a lot of my panelists would agree. During a time of crisis, 99% of us want to be managed, want to be led.
Right.
Because these are anxious times. These are times when we're actually looking for emotional, psychological support. We don't want to be left on our own. We, as much as there is this cool thing of, oh no, grant people autonomy and let them do their thing, and they're working from home, do not be that, right? There is this inherent urge that I want to be led, I want to be managed, I'm okay with being told what I should be doing. So the first thing as a founder, as a leader, is you to be absolutely authentic in your conversation, in your communication. There is no point you coming across as the man with rend underwear over your pants. You don't want to be coming across as a superwoman. You want to be coming across as an authentic human who's just as scared and who's just as anxious about how the situation is as you are, but hopefully has a way, or at least in it together than anyone else. So that's number one. Number two, this is a time for over communication than under communication. And because people are working from home, boundaries are blurring. There is very little that's coming in the form of consistently stable and verified news. So you want to be killing the rumor reels. You want to be killing every possible quote unquote equivalent of a water cooler conversation that may be happening in WhatsApp groups right now that you're not part of. So you want to be communicating with your teams as much as you can, and even more than is necessary. And number three is, at least this is my personal way of doing it, and I wouldn't recommend it to everyone because it takes a lot, is be absolutely honest about where you are, even financially, when it comes to the startup. And what will happen is the following. People, there are two sets of individuals, one which have financial distress as a reality of their life. So there's very little that you can do to even help them. Like they need that salary, they need that income because they got to pay off the loans and so on. But the other side had a salary because they were getting a salary, not because they necessarily needed one. Like they can wade through things. If those individuals buy into this reality and come together to fight this, whatever is the situation you're in together, you're going to create a culture that you've never seen before. And then most of the companies, if you go back to Netflix, you go back to even Ben Horowitz, Hard Thing About Hard Things, you go back to any company that's gone through crisis, whether external or internal, has only emerged stronger had they acted in a way that was authentic, consistent communication, and being absolutely transparent with what things are. And I would say that this is what the founder should do, irrespective of whether they're first time or not. And then if you take this opportunity to truly train yourself as a leader, as a founder, then this period is going to truly train you and define you as a leader that you ought to become, or you should have been from day one, as against who you were.
Super. So
I think Vinit is raising his hand, so I think he has a point to make.
I can raise my hand. Ankur, you made a great point, and I don't want to take away from the next question that the hosts have. But Ankur, a lot of founders, I was one of those founders. Maybe 5-6 years ago, I was naive. I wanted to be authentic. I wanted to be transparent. I heard these words, but I didn't know what it actually meant in action. We have a lot of founders here, some 170. I think some of them may be in that position, and I want you to help them by giving them some quick bits on how can they do that.
Honestly, as I said, Vinny, I feel that this is a conversation that deserves its own time and Arvind and Vivant, if you can. But if I were to very quickly answer, and thanks for asking this question, Vinny, what works for me, and that's the only thing that I can share, is one, when I say it's authentic, you need to not be just unidirectional in your communication. You need to encourage people to share feedback, and you need to now do it in a form that is not associating that name with the feedback. So the biggest thing that helped me when I was a founder is I realized that anonymity is something that works in India, and you can use that to your advantage. So do that as much as you can. Right now is the time for you to be creating a Google Doc where you invite all possible questions from everyone in your company on whatever is it that consumes them. Don't ask for their names. Don't ask anything, and you will get questions all across the board. You will get questions that will abuse you. You will get questions that will mock you. You will get questions that you may not want to hear. But as a leader, that is the first thing you will do. And then what you would do is you would address all those questions, but you will have the answers public. So you would not, because you don't know who to answer to. So you will address this, and that would be your way of coming across and saying, I'm going to create this transparent layer where every possible question is encouraged. I would want to hear that, so that every rumor, every possible anxiety, every possible feeling that is being left unaddressed is addressed and addressed directly by me. If I don't have an answer, I'll be the first one to admit that I don't have it, but at least you will know that that is what's going on in my mind. And that is the first step to do that. The second one, which is incredibly critical, is it's almost this reverse psychology. When we were all in office and we were part of, let's say, these pods or these tech groups which are creating these products, the engineers, their product managers, designers, and so on, we were always like, time mat waste karo, Facebook pe mat jao, WhatsApp mat dekho, Instagram mat karo, don't have these coffee breaks, just work. Now it's almost the anti of that. You don't want people to be working so hard. You don't want people to be burning out and spending their time on working from home. So what we have done, and it's worked tremendously well for us, we have actually forced a downtime for everyone who's working from home. We've said after an hour of work, you have to mandatorily engage with your team socially and just do whatever you want. You want to discuss about your Netflix series, you want to discuss about work, you want to discuss about your love life, whatever it is, you want to bitch about company, do that. But do that so that at least that feeling is there, and you will then, because you've created that first loop of feedback coming in, these conversations will allow that feedback to socialize. That conversations will allow these feedbacks to become part of that culture and become ingrained over time, and you will get newer feedback that you will again have addressed. So this loop is working tremendously well for us. Of course, I'm saying it in a flippant manner as if it's the easiest thing to do, but this has come after years and years of just completely screwing up, just as Vinit mentioned. Like we were that company that I am talking about right now, where we did nothing right, and now we've realized through our own crises of how this works, and that's all that I'm sharing.
Sure, super. So,
Ankur, thank you.
We spoke about mindset, and Vinit, I want to ask this question to you, since you have a personality, and based on all your videos that you post on LinkedIn, or speaking just the truth, however harsh it might be. We've spoken a lot about founders, we've spoken a lot about employees, but there's a major stakeholder that we haven't given really advice to, and that is investors. So Vinit, my question to you is that what recommendations do you have for your fellow investors, either people on this panel or the general ecosystem that you see in angel investors or the larger funds, into what shifts in their mindset is required, or what practices do you think they should change, either what you're seeing today or just in a long-term point of view, that you think can help the ecosystem?
Hey, this is a tough one, especially because I may be the youngest on the panel and also the youngest investor on the panel.
I purposely addressed it to you since you talk about mindsets on your blog, so I thought this would be the right person here.
Fair enough. Thanks, guys. And please bash into me publicly if you think I goofed up badly on this. One of the things that I am already having to grapple with this, right? I mean, here I am barely learned how to be a good investor, and now the entire whatever I've learned in the last 15 minutes, I have to sit back and already reevaluate. So I don't have the comfort of 5 years. After 5 years, I reevaluate, right? I'm having to reevaluate after 15 months. And a couple of mindset changes that are happening, I can already, compliment a lot of investors, not just from my fund, right? Other VCs, other angels, is that they are recognizing something that was already unspoken, but now it's coming out very clear, that your founders don't need your money, right? If all that you were giving out was your money, then honestly, there are other cheaper, less intrusive ways of getting money, right? And now it's becoming very clear to those investors. And I think this is where, investors, angel investors, VCs, whatever, who have had operational experience are now suddenly sort of hitting their stride. They don't need to learn things on how to talk to the founders, where is too much advice to the founders and where is coming from experience, right? So when Ankur speaks about something, or when Ninad speaks about something, I'm like, hey, listen, he's not read a book. He's obviously, screwed up or learned or whatever, and he's saying it. And a lot of investors still have to grapple with this new reality. It already existed, it always has existed, but they could get along all these years without having to, get their hands dirty, right? And now they have no choice. I mean, at Oras, for example, Rehan made it very clear, 2 weeks ago that, hey guys, if you aren't having deep conversations with your own portfolio companies at least thrice a week, then you as an investor are doing a disservice to them. Right? And this is because of two reasons. Number one, it's very lonely at the top, like Ankur said, right? You as the founder are there for your employees. And who's there for you? Right? And not everyone is very lucky to have two other best friends who are also founders of their own startups. So you guys can chat, very openly, right? The same investor, the same board of director who earlier was the tough guy on the board, well, now you've got to be mature enough to also sort of take back that persona and put ahead the other persona, which is to be the guy who the founder can speak with. And this will only happen if you're authentic, because otherwise the founder doesn't know. And it's truthful, right? The founder doesn't know, if I tell my investors something in a moment of weakness, how is this going to be used against me a year later or 6 months later, right? And that thought will not come if you're authentic. A lot of founders, even people I haven't invested in, will reach out to me and say things, and I have a conversation, and then I go back and I'm like, why didn't he speak to his own investor about it? I mean, XYZ fund has invested in them. No, I mean, I'll help him, but what is going on, right? And this is what is going on. Those investors have not changed their mindset to understand their new role in this new normal. The faster they learn that, the better it will be for their portfolio. And I believe they'll be better investors. And maybe I'm too naive. I didn't know any better. So it came very sort of, first principles to me. Had this entire COVID situation happened after I'd been a VC for 5 years, I would also need another Vinit to sort of hit me with this, right?
Sure.
So that's my take on it. Sorry if I stepped on anyone's toes.
Sure. So we have just a few minutes left, and this is one question that popped up a lot again. So the question over here is that, do you as investors, since you guys represent different stages of investing, do you feel that a particular stage of investing will get more hampered versus the rest? So like, do you think like angel investing versus Series A have a greater impact? Anybody could jump into this. Perhaps Ankur, you could take the question, start off if you feel angel investing is going to stop or have a particular impact.
No, I actually am seeing it quite the opposite. I feel that angel investing is going to become the dominant force in the next 12 months, because a lot of great ideas will come up from this crisis. A lot of smart people will take this opportunity to start up, and a lot of entrepreneurs and their own liquidity has been there that they would want to give back to the ecosystem. So at least what I'm witnessing is a lot more aggressive, very sharply thought through and very long-term view ideas are emerging, or at least I'm being approached by. So I remain a positive guy on angel investing.
Touche, Ankur, I agree with you 100%.
Perfect.
Okay, so let me add a slightly different point of view. So I'm sure angel investing will thrive and a lot of sharp ideas will emerge, and I have no doubt on that. But so I have seen in the US a crisis in the late 80s, and then the 2000, and then 2008. And I can tell you there is definite risk aversion, and capital starts moving towards the later stages as well. So I think we may have a dumbbell kind of ecosystem whereby people now, rather than to go on hope, faith, belief, and prayer kind of strategy, would want to see product that is well formed, has some market traction. I mean, at least that has been our strategy from day one. We don't mind paying a little bit more, but we like to see a product. We like to see management team that has at least 20 years, if not more, of experience. So they have seen the cycles, and that has been, it's not because of today, that has been our investment philosophy from day one. Maybe because we started post the 2008 crisis, and because I come from distress and turnaround environment. So I think, again, the larger investors who were looking for yield and moving down towards earlier stage may go back to their pedigree towards the Series B, Series C, where there is a product, there's a customer, there's traction, you know how much a customer is willing to pay for it, and then support it for growth. So we may have a lot of early stage or very early stage, as Ankur and Vinod are saying, where angels may have great opportunities, and the VCs would become a little bit more taciturn and more cautious because they have to take care of their own portfolio companies. A lot of their money would have to be conserved. If their portfolio companies don't get the next round, it would have to go towards that, and they would want to then deploy the rest of the money towards the later stage companies.
Vinith, would you like to add something?
Yeah, I have a little bit, again, maybe not been a VC long enough. I have a little bit of a, founder mentality here, right? It's like, if you are not producing today, then what are you going to sell 30 days from now, right? Which means if you were not producing 30 days ago, you had nothing to sell today. So as a VC, if there are any VCs who are saying that, okay, next 3-4 months, we are not going to invest, well, then, what companies will you have in your portfolio to show a year from now? Right. So I don't think that has changed. What may have changed is certain filters, like I said earlier, which were earlier being lax. You were being a little bit more flexible because there were distractions. Now it will just become a lot more focused. Having said that, if there are any investors who are not investing for the next 3 to 6 months, they probably would not have invested for the next 3 to 6 months, even if the corona situation had not happened.
Sure.
Right? And the ones who will invest in the next 3 to 6 months have a fiduciary duty to their own LPs and to their own fund, because, no one is going back to their LPs. No VC is going back to the LPs and saying, hey, my 7-year fund needs to become a 12-year fund because of corona.
Sure.
I mean, we all wish it happens, but it's not going to happen. So that's number one. Number two, I believe that this is absolutely the right time. I mean, because what has happened, like I said earlier, is all the fashionable founders have been taken out of the market. So whoever now remains is truly the real crazy misfits. Nothing is shaking them away from entrepreneurship, and those are the people I want to meet. I don't want to meet the guys who, last year were doing B2B, this year they're doing B2C, next year they'll do a startup in gig economy, and then they'll go join a consulting firm. I don't want to meet that guy. I want to meet the guy who's crazy. Looking at everything, he's still waking up and saying, "Nahi yaar, mere ko to startup hi karna hai." Super. Please come by, say hi. That's my answer.
Perfect. Thank you.
Passion replaces fashion. Huh? Vinith, passion replaces fashion.
Fashion should have never replaced passion.
That's well summed up.
Thank you so much. On that note, I think we'll end today's session with